Okay, for 3.1, the problem says the biweekly taxable wages for the employees of Right Shop follow. So that's what they've given us here below. All the employees' name and their biweekly taxable wages. Compute the FICA taxes for each employee and the employer's FICA taxes. So if we look in this column here, they've got their wages, which are G13. Whoops, sorry. So G13, if we look up at this formula here, is this cell here, and then times the 6.2%. So 0.062 is the 6.2%. So that's what represents the Social Security rate that the employee has to pay. So then as we look down through all of the cells, you'll see it's just that same formula. It's just changing the row number. If you're setting this up on your own Excel sheet, if you just pull that down, you highlight it and you pull it down, it'll just copy that formula for you, so you don't have to put it in every time. You can see that's all the same thing there. Then if we come down to the employers, what they're doing here is they're taking their total, which is this same total that's right here. So G20 carries down to the total taxable wages. So you can see them in the cell up there, G20. So then this cell here is just taking the taxable wages times the 0.062. So then this is where you'll see like a rounding difference. So when you fill out the 940 tax form, there's a line number for those rounding differences. So then there could be like a penny that goes in there, because you can see when we go through individual by individual and add them up, we get to 89 cents. But then when we just take the total times the 6.2%, we're just a penny different. And then this little hint is telling you that. Let me see exactly what it says to us. Yeah, it just can occur due to the rounding of the individual employees' amounts. Okay, then we do the same thing for the Medicare. So we take their wages that were in this column here, and then now we multiply them by the 0.0145, which is 145%. And again, if you were setting it up yourself, you could just carry that down and it would create those. Then same thing, they're taking their taxable wages, and if we look in this cell, it's going to be times that 0.0145. And in this case, they are equal. So there would be no rounding difference there. So again, I feel like Excel makes it very easy to kind of set some of these things up. And I do think it is worth your time to try to do that. Okay, then we move to especially on these types of ones. Then we move to number 5, which is the next one that we do in Excel. And the problem says that the annual salaries paid each of the officers follow. So then here we have the officers. This is their annual salaries that the problem is given to us. The officers are paid semi-monthly on the 15th and the last day of the month. So compute their FICA taxes to be withheld from each officer's pay on November 15th, and then be December 31st. So one pay in November and then one pay in December. So if we look in these formulas here, they are taking they're trying to calculate your taxable earnings. So if we look inside that cell, it is taking their annual salary of $156,000 and then subtracting out the $132,900 from that. So that is our limit to say we are only going to be taxed up to that amount. Now then they are multiplying that by 20 and dividing by 24, because there's 24 semi-monthly periods in that year. So that's why we're coming up with that number. The 20 must be because we are in November 15th. So is that true? So November would have 2, which would take, yeah. So that would be correct, because November would have the 21st and the 22nd pays, and then December would have the 23rd and the 24th. So they're calculating what has been paid already by multiplying it by that 20. And then same, oh, this one doesn't matter because then this is the one that's the hard one. So again, kind of look back through that formula because he's over the limit. So as we move down to these other ones here, you can see the formula is just very easy. We're just taking their annual salary and dividing it by 24, and that's going to be their taxable earnings. But because this one is over the $132,900 threshold, we need to subtract that out and then say from that point, once he's crossed over that threshold, he will not be subject to those taxes. Okay. So then if we look at these formulas though, the Social Security tax is the 6.2%. So they're taking this taxable earnings times that, and then calculating those should all be the same straight down. Then the taxable earnings for Medicare. Now you can see then this is higher because here he reached his threshold. Here he's completed that $132,900. Where here there is no threshold, so it keeps going. So all of these ones will just be divided by the 24 because there's no limit. And then we come over to this cell and we can see it's our tax or our Medicare taxable earnings times that 1.045%, and that comes up with the tax, and that should be the same for all of those cells. So then really the key to it is just this first one, kind of looking over that guy, because he will not have to pay the Social Security taxes on any wages over that $132,900. Then if we jump down to December, like let's just have them both so we can see them, you can see that this guy no longer pays anything in Social Security because his last Social Security check was November 15th. So then November 30th, December 15th, and December 31st, he will not pay any Social Security taxes. He still will pay into Medicare, so that part's the same. Now then this guy has crossed it. So again, the $132,900, which is that limit, we can see he gets there, but he doesn't get there till the very end. So then now if we look in that formula, it's saying, okay, it's his very last paycheck. So we're taking the $138,000 from the limit of the $132,900, so only $650. We're subtracting that times the 23. The 23 pays because this is his very last pay. So only $650 out of that his very last pay is going to be taxable. His entire pay is this amount over here. If we look over there, that's the full salary divided by 24. But of that $5,750 that he's getting paid, only $650 is taxable to him from a Social Security standpoint. But then this row here should all just be the taxable Social Security wages times the 6.2%. And then again, over here is the 1.45%. Okay. So then the key to it again is just knowing those limits. And then here, I guess it tells you, whoops. Here it gives you like the kind of, if you would rather see it versus just looking at it in the formula, these are the formula calculations in down below those tables. Okay. So again, Excel makes it pretty easy, but again, you have to understand those thresholds. All right, then we move to number 8. So number 8, we have Ralph Henward was paid a salary of $64,600 during the year by the Odesto Company. In addition, during the year, Henward started his own business as a public accountant and reported net business income of $70,000 on his income tax return for that year. So they'd like us to compute how much is he going to pay in Social Security and how much is he going to pay in Medicare, because he has both employment income and then he has self-employment income. So if we look at these, and these you probably wouldn't even necessarily have to do in Excel. You could probably just write these out. But so if we look at his $64,600, that entire amount is going to have Social Security withheld out of it. So you can see that that's G9 times the 6.2%. And that entire amount is also going to have the Medicare. So G9 times the 1.045. And his employers are going to do that. So Adesto Company is going to make those withholdings and match those withholdings. Now, when we come over here to his self-employment income, it shows us the formula, which is also probably in that cell as well. It's saying, okay, the $132,900 limit, they're going to subtract out the $64,600 that he gets paid by his employer. And then the remainder is going to be subject to self-employment income. So then that is what is the calculation there to result in the $84,069.20. Now then the entire $70,000 he'll have to pay the Medicare, but if you look at this premium here, notice that's only, sorry, I should make that notice on Social Security as well. If you look at this percentage, it's 12.4%, whereas when he is the employee, it's only 6.2%. So because he's now the employer and the employee, he pays that higher 12.4%, but again, only on the amount up to the $132,900. Now here he'll pay the entire 2.9% on all of that amount. So then that is what he calculates as his taxes. And then these taxes here again would be withheld by the employer. These ones he's going to have to pay in quarterly. Okay, so then those are the ones to solve on Excel. The other ones I will have answered in a Word document.